Well, hello, folks. I'm LA Little, and this is your daily NeoTA wrap, where we take a look at these markets, and we do it from a neoclassical perspective. Each time we ask ourselves one question only, and that is, what happened today, and does it tell us anything about the coming days? I do a show 4 times a week, every Monday through Thursday. I broadcast it at or before 10 o'clock Eastern Time. It's archived on YouTube. It's on our channel, LA Little. Subscribe, get it there. Makes it nice and easy. Anytime content's pushed, you get notified so that you can go grab it and take a look. I will not be doing a show tomorrow. I'm going to be heading up after the market closes to take care of some business, so I will not be around to do the broadcast, so no show tomorrow. As far as today, though, let's see what happened. Let's look at the ending numbers here. And basically it was a flat day. So the index was strong all day long. That was really Apple. Apple was pushing pretty much all day to the top side. Got another upgrade, got a numbers boost, so forth. So Apple's the juice here, and Apple's pushing it and the composite higher. The rest of the market just floundered, sideways. We had gold sell off one more time, down 14 bucks again today, another 1%. Silver as well. Bonds actually reversed, finished up. Dollar also higher, third of a percent. And so that really is part of the issue. But what I want to do is I want to back up just a little bit here as we get started using our favorite chart, the S&P 500. And talk about where we are again. And so let me bring over the weekly chart. And let's kind of back up here and kind of think about what's happening. So in matter of fact, it's probably easier just to bring up this chart to start with. Let's get the context here. The context is we have been on a long run for a very extended period of time, right? I mean, you usually don't get these kinds of runs that just continue forever. Now, you can find places along this run where consolidation took place. So once it got started here, right, there was kind of a consolidation period here, another one there, right, and then another one now. And so you can see along the way, you've kind of had these consolidations, where there was a cap on it and then it breaks out, another cap, so forth. Well, that's where we are. So that's the long-term perspective. At some point, this will fail. They all do. That we know for a fact, right? It will not do this forever, right? There will come a time when this thing will roll over. What you're always doing is you're watching to see when that might be taking place. Now, fast forward to a weekly chart. Now, those consolidation periods look a lot different when you look at it on a different time frame, and in this case, we're looking on the weekly. And what I would notice here is that you had a sell-off here, straight back up to new highs, another push back, straight up to new highs, another push back, new highs, and then a big push back down. We haven't seen that in a while. That was the October number, right? Remember, it made that big plunge down, hammer reversal back the other way. And then what does it do? Goes to new highs again. Then we get another push down, and then that goes to new highs. And then we really get caught in this range now since December. And so this range since December essentially, carries us all the way back into the August-September time frame. Really the September time frame. And so late August, early September, and then we had the plunge down late September, early October, until the middle of October, and then we come roaring back out of that. So that's how we got to where we are. And since then, it's been just a lot of gyrations up here, in this big range that's been going on. Now, let's pull over to the daily. So what we've been watching, what we originally were watching, if you've been watching me for a while, we were watching these two bars because these were the big bars. And a lot of times when you see this kind of a move, it holds price for a long period of time. And what I mean by that is that acceleration, that wide price spread type action tends to if we fall back into it, which typically you will, because you can't extend that far. Usually you can't extend that far, especially off this kind of a drop. It will hold that price range for a while, and that's kind of what's been happening, right? And matter of fact, if I draw this differently and actually take the top of that bar and the high of that one below it, if you look at it, most of these closes have been inside this range, right? I can count, if I count the ones that have been outside, I can see one close here, another one there, another one here, and that one there. Everything else is pretty much inside that range. So I've had 4 bars out of, basically from, well, you had this range up here, so there was a bunch of little bars up there. But if we just count from here across, that's basically what, end of December. So you've got about, I'm guessing that's 40 bars, probably 40 bars. It's probably about 35 bars across, of which 4 were outside that range. Now we are finally seeing this market get some closes up above the range, and we had not had one since December. That's a difference. That's a change, right? And what you want to see is when something like that starts to happen, you want to see it confirm. You want to see it hold, and you want to see other things confirm it. So we had 1 bar out yesterday. Now we got bar 2. That's the sort of action you want. Now what wasn't good today was we actually went over yesterday's high, 2070.86. We go over it today. We're doing 36 roughly. We did 36.6 yesterday. So we did slightly less volume, over, back, under. That's not good. Okay, but that's not horrible because it's so close in terms of size. Now, let's look at the other indexes, because the question is do we have confirmation elsewhere that would give us confidence? And so if we move over here to the NASDAQ, right, and this is the broad composite, yesterday we got a breakout here right along with the S&P 500. And what does it do? It's going right to the highs. There was a break of this high already, so the one that's left is over here. And so that high happens to be 48.10.86. We got as high as 48.10.36. So we didn't quite test it. Notice that it has absolutely no volume on it. You've been up there before. There's another swing point high here. It has absolutely no volume on it. That was right before Christmas. So as you're going up there, you have a lot more volume. The other thing you have is you have an ABCD structure in place on almost all of these now. That ABCD structure was the thing I was talking about last, I think it was Sunday night we talked about this, and that is that what we want to see, what would be a change? A change would be where we pull back. Here, let's go back to this. Every time down has been a thrust, one-way ticket up and down. No breaks. All the way up, all the way down. And that has gone on all this whole period since December, the middle of December. What I talked about being a change is if we pull back and instead of going all the way down, we hold somewhere up here and then make the move, right? That's when you can get the breakout, and that's exactly the setup we have. We extended here today. Extension is exactly what you want to see. That is a good thing. That's telling us that this thing's going to attack those highs, and there's 2 of them up there. And not only is there 2 on this time frame, you've got one over here on this time frame as well, the weekly. No volume on it either. If it breaks with multiple swing points, multiple time frames. That can get the juice going. NDX, same sort of situation. Today it breaks. This has been the lagging index. Now with Apple powering it higher, this one actually breaks out. 42.92.88 closes tonight at 42.97, and so you got your breakout on the move. Volume is a little bit higher. That's exactly what you wanted to see. So another confirmation that this thing's trying to set up another move. And again, just like we talked about on the NASDAQ, you have the same thing here. You go up, you come back, you got an ABCD structure on the upside. Russell, If we look at the last one here, the Russell has the ABCD2 if it can get over this high. Russell was leading. It broke out before everybody else. That high that it broke out over 12,052.92, it's a big long bar, and so it can come deep if it wants to. But with the other stuff doing what it is, I don't expect it will unless there's a total failure. Now the risk, clearly the risk is that this fails, that this is a failed breakout and it comes back. That's what the Russell looked like it was trying to do on Friday. And if we go back to the S&P goes over, back under, does a doji. That could be what this is trying to do. But we have the other indexes telling us probably not. And if we go to the sectors, we've got the sectors telling us the same sort of thing. So if I pop over to the sectors, let's look at the ones that are telling us something positive. Here's the SOX. 2 swing point highs, gets over them, heading back up to test the next one. If we look at the financials, remember they got over a retest regenerate bar last night. I was talking about it. It was a bearish one. This has been a nemesis now for 2 months, right? Finally gets over it, holds it 2 days in a row. Again, you need a couple bars to tell you that it's probably gonna, but it's probably for real, right? And that's what you got again today. XLK, right? This has been trying to break out, breaks out yesterday, gets extension today. Again, the same sort of thing you want to see. XLY still up at the highs. Let's look at the XLV. Healthcare, sloppy chart, but it's trying to push back up to the top end of the range. And so, and then one more is the XLI. This one's actually setting up to try to break out too. So when I look at all of these, as a matter of fact, I think you'll get some tailwind now on the XLE. XLE potentially is going to have a break back up into this gap area. And that would be totally uncalled for, right? I mean, we haven't been able to see the XLE be positive for these markets in a very long time. And the reason I say it might do so is we had huge inventory numbers again today. And if we go over here and look at the oil market, it did a doji, tested back into these big volume lows and held. That looks like it's going to flip around and head back higher. And so that's the oil market. Let's look at some other things here. Now, a nemesis is the dollar, right? The dollar trying to break out and go to new highs again. It's got some decent volume as it's coming up there, but right now it just looks like this is range trading off of big bars down here, right? And it's just range trading. If it starts breaking out and starts to sky high again, well, that's probably going to be a problem. If we look at the TLT also looks like it's trying to range trade. Now, it did do an under over today, less volume. It's into these big bars here. That looks like it is still gonna try to lift, but I don't know that it's going to go that far, because if I look over here, right, it does look like it's trying to come back into that high. So this still looks like a range trade with the potential for a bounce and then some more downside. If I go over to the other currencies on the other side of that dollar, let's do the big three. The British pound's one of them. That one's kind of hanging up at the high end of its range. And so we're looking at ranges here. Kind of got a range here. It's taking away from the dollar. What's pushing into the dollar, of course, is the euro. So if we look at the euro, you can see it has a range. That range is, right now it's in this area. It's drifting back down to the bottom of the range. But folks, there's a lot of volume at the bottom of the range. Unless we get a real, Greek tragedy, shall we say, I suspect it's going to hold the range. The one that really is pushing back down now is the Japanese yen. And that's got two kind of equidistant ranges here in that area, right? And it's pushing down into the bottom to test this bottom again. And this one can go lower, but I suspect it's probably going to range trade a little bit longer. So currency-wise, it looks like a range trade. Bond-wise, it looks like a range trade. If I look at fear trade, that's gold. Gold has been getting hit, got hit again today. This thing has come off the top. It tested into the bottom of this big bar today and actually got under it, which is a negative. It looks like it's going to try to test even lower. So ugly situation here in gold. If you remember, getting over the swing point high was a big deal. Now as you're coming back, you actually want it to hold that retest, right? Hold this retest and regen. Gold, in my opinion, needs to get right back up in here tomorrow. If it doesn't, then gold maybe really hasn't changed. Maybe it's just a bounce. And so that's kind of the gold situation. Silver looks about the same, and I don't think there's much more to say there. World markets all kind of hanging at their highs, nothing really different there. And so let's think about it from the perspective of the final thoughts. So if we consider this from a perspective of the S&P, the indexes in general, recap what we have. We have the index breaking out. We have the composite trying to break out all of the highs. We've got ABCD structures in place on most of these breakouts or these pushes. We got the S&P does an over-under volumes almost the same. We've got earnings tonight. If we look at the earnings, and I didn't go over these very much, but you actually had Cisco come out pretty strong. I saw Tesla, but Tesla to me is just kind of a a glamour stock. Baidu fell quite a bit. That's going to take away from Cisco. But outside of that, it wasn't all that negative. This is the last night of big earnings. This is the last week of big earnings. Pretty much Cisco brings to a halt the earnings parade. Alcoa starts it, Cisco stops it. So the earnings are pretty much out of the way. They're not going to be the story. The economics really aren't the story. The story is the geopolitical concerns in Ukraine and whether a deal gets worked out on Greece. And if you look at the after hours, there was a big spike right after the market closed and reopened. That was on the idea that the Greek, there was a report that Greek had reached potentially an agreement. You got a 10-point S&P spike, or I guess it was 8 or 9 points. That's the sort of thing that can happen, should happen, if a deal's made. Of course, they took it right away when they realized it really wasn't a deal. So you can see this market is just simmering and waiting on something to go on. That Greek tragedy, so to speak, they pick it up again on Monday. They didn't come to terms. So that means we're going to have a vacuum. What's this market going to do in the vacuum? Well, right now it looks to me like this market is going to hang and try to push higher. And as long as Apple and some of these other big stocks, the SOX for example, can continue to motivate others to join them. It was a narrow day today, a narrow advance. There was nothing special about it. What's going to be special is if XLF can find its way higher, XLK continues to support, maybe energy starts to kick in, right? You need some of these other sectors, maybe industrials. You need some of those other sectors to kick in. The way they kick in is if that dollar doesn't break out and actually holds the range and people see it's going to hold the range. Because what was the problem in earnings this year, this quarter? It was dollar. And so that's kind of the concern that's out there still, is dollar strength. You need something to show you that the dollar isn't going to just keep skyrocketing and it's not going to get worse for these corporations. So that really is kind of the outside thing we ought to be watching. That's it for tonight. Again, recap. Tomorrow I'm not here, so no show tomorrow. Have a great day. We'll see what happens. Take care. Until next time, I'm LA. This is and it was your daily NeoTA wrap. Have a good one, folks. Good night.